Hi, and welcome to an episode of Placks Chats. Joining me is Andrew Gazdecki, founder and CEO of Acquire.com. Thank you very much for joining me, Andrew. How you doing?
Yeah, good, Nathan. Thanks for having me on the show.
Yeah, thank you very much. To dive straight into it, it would be really great if you could introduce yourself, maybe a little bit about your background, as well as Acquire.com.
Yeah, definitely. My name's Andrew Gazdecki. I've been an entrepreneur kind of my whole life. I think it's kind of the short story. And now I run a startup called Acquire.com where we help startups get acquired.
Nice, nice. I had a look at the investors that you've got on board. You've got some incredible people backing you. So I can imagine it's been a fun journey so far. And when you went about founding Acquire.com, how did you spot a gap in the market? Was there any key moment in your journey that led you to this?
Yeah, there was probably two big moments. One was I previously I bootstrapped a no code mobile app builder and had that acquired when I was 29 and sold the business without a investment bank, business broker. And when I sold it, I had like countless friends reaching out to me like, what is due diligence? What is legal? How'd you find the buyer? What is private equity? And I thought that was all common knowledge for startup founders. And so I saw that as kind of the first gap in the market. And then second, after that, I started another company, which I sold to a company called B&K to the Future. It was like a crypto protocol company. We were trying to make sending Ethereum faster. It's still slow, so we didn't succeed. Uh, but again, after that, I started it with, okay, I've sold one business. It's good to prepare for an acquisition from day one, but even selling that was hard. So always in the back of my mind, I wish there was just a marketplace where startup founders could easily meet buyers within minutes, really help prepare startups to be acquired in terms of tidying up their financials, streamlining legal documents, just making the whole process more efficient, even all the way down, just finding a buyer.
Yeah.
And so I think just those two experiences. And then, when I originally launched MicroAcquire, now acquire.com, I didn't know where it was going to go. I just knew there was going to be a big rise in entrepreneurship through acquisition.
Yeah.
And also, I thought a lot of businesses, or I should say, founders were going to bootstrap their startups. So business brokers, investment bankers tend to not want to work with smaller size businesses. And when I say small, in Silicon Valley, small is like 10 million, but it's a lot of money. So I saw this big opportunity of, okay, we got this big market. It's super fragmented. There's been no innovation. Everyone seems to favor the buyer. There's limited information for founders. And I love helping entrepreneurs and startup founders. So I thought it'd be a fun business to start.
Yeah, that's so awesome. I think the timing is great as well because I represent loads of buyers, and the main thing that they all struggle with, whether it's PE houses or corporates, is deal flow and actually finding the companies. So the fact that you put it all in one place is awesome. And do you think the end journey for MicroAcquire or Acquire.com, do you guys see yourself being acquired one day, or what's the longer term journey for you guys?
Yeah, it's a great question. I mean, I always say every business is for sale. I don't care who the entrepreneur is. But yeah, I mean, if someone came knocking and they said, here's an outrageous amount, sure, but we still have a ton of work to do in terms of like the ultimate vision that we want to achieve, which is really standardizing the acquisition process. We want to create the standard LOI, we want to create the standard asset purchase agreement,
No.
just really closing the gap between the thousand different ways you can write an LOI or the thousand different ways you can go through due diligence and help startups get acquired faster. So we're going to keep chipping away at that. But yeah, I mean, one day it could be cool to list acquire on acquire.com and
Yeah.
get, you know, kind of the full circle. So you
Yeah.
never know.
Yeah, that's really cool. And are there any main trends that you're seeing in the M&A market currently, whether it's US focused or any other geographies?
Yeah. So we're seeing record high buyer signups. as an example, we saw 14,000 buyers sign up last month, which was a record for us. So there's a ton of activity. I think on the upper end of the market, things are softening and things are slowing down a little bit. And that's the, 9-figure deals, billion-dollar acquisitions. Those are slowing down just because there's been such a decline in just overall software company valuations. But on the lower end of the market that we serve, specifically profitable bootstrap, SaaS, e-commerce businesses, there's been more interest than ever in those businesses. And we really haven't seen too much change in terms of valuations. There has been a decline, but not a dramatic, 70-80% decline that you've seen some public software companies take. So the market seems to be looking at this as like a new maybe asset class and diversifying into buying profitable software companies. So a great time to be a founder for sure.
Yeah, for sure. I think across all of my clients, they will look to do 10 to 50 deals each year. I think a few of them are actually signed up to your platform, and it's all the kind of $1 to $20 million ARR mark where they are bootstrapped. It seems like there's loads of demand for those at the moment. And with those 14,000 buyers that you had join the platform, is there one type of buyer that's more active than others, whether it's PE or corporates, or yeah, what does that look like?
Yeah, it's a good mix. We see a lot of private equity firms. Like if I go into our buyer list and just type in equity or capital or something like that, private equity firms are very creative with how they name their
Yeah,
firms. So we'll see thousands and thousands. And so I'd say financial buyers, meaning private equity firms, are the largest group within Acquire.com. And then we work with corp dev teams from, a number of different public companies, also VC backed startups, even bootstrap startups as well. And then a lot of family offices, and then even individual entrepreneurs,
yeah.
maybe second time entrepreneurs. They sold a business. They're looking to buy something that already has product market fit. So we see kind of like the full array of buyers, if you will.
Yeah. Okay. Interesting. One thing that I've noticed is that VC backed companies, they seem to, maybe some of them struggling to get from kind of seed to Series A to Series B, and then M&A is another exit opportunity for those types of businesses. Do you have many VC backed companies on, or is it mainly bootstrapped?
We do. We do. The majority is still bootstrap, but we have been seeing a good increase in VC backed companies because, for a lot of startups, unfortunately, they're likely gonna have to fold. And I had a conversation earlier this week with a founder, a few months left to runway. What do I do? Shut down the business. And the situation there is with Acquire.com, normally those businesses would just shut down, but they built valuable IP. They have happy customers. There's something of value there. And so, not necessarily my favorite acquisitions to do because, it's not what the entrepreneur wanted to really achieve, but at least the business doesn't go to zero. So they're able to pay back their investors some amount. Maybe that's half, maybe it's more, maybe it's less, but anything is better than zero. So, to answer your question, yeah, we have, and we've been helping a lot of startups navigate situations, whether they're super profitable and this is going to be a life-changing acquisition, or hey, I'm, looking to exit this business, repay investors.
Yeah.
And there's a lot of demand for those types of businesses as well, specifically the venture-backed businesses, because they can be essentially restructured to be a sustainable business instead of going for that, billion-dollar outcome, if you will.
Yeah. Okay. That's awesome. And with the process and how streamlined you've made it, does it reduce the costs for kind of sellers and buyers in terms of advisory fees, whether it's legal or financial due diligence? What's the decrease in cost for the people on your platform?
Yeah, it depends on the deal size. I always recommend if the acquisition is going to be over, say, a few $1 million, it definitely makes sense to hire an attorney, like even for a quick glance over. But you can build a letter of intent within 60 seconds, and we have a ton of different terms like seller financing, conditional holdbacks, You name it, we can build a really, really robust letter of intent. And that also translates over to an asset purchase agreement.
Yeah.
So those are actually being used by even, attorneys that come on our platform because they're high quality. So I think that's kind of a nod,
Yeah.
that we're headed in the right direction. But we typically will see, attorneys come in kind of at the closing just to do a final review.
Yeah.
And then we also have attorneys that we reference out to startups that may need those. Um, so I hope that answers your question. I think I
Yeah.
lost my train of thought, but
Yeah, that definitely. I think it is good because there's loads of sellers in my network, so I think they'll be quite attracted by the platform because it really does seem like a one-stop shop type thing. So yeah, that's awesome. And companies on the platform that are maybe selling at higher multiples than market average, do they have anything in common with each other, whether it's the management team or certain type of revenue or something like that?
yeah, great question. I mean, the best businesses are the ones you don't want to sell. There's that saying. I'd say if you want a business to sell, like get swarmed by buyers on acquire.com, like what's like the perfect fit? Put a SaaS company doing 10 million in revenue, a couple million in net profit, and that business will have so many NDAs and offers on it that it'll be overwhelming. But then also on the smaller end too, we have a lot of buyers looking for, businesses that are doing, let's call it 500,000 in revenue and and I say only 100,000 in net profit, which is still a meaningful outcome.
Yeah.
Those businesses do really well. But to round out the question, I would just leave it at profitable SaaS, profitable e-commerce. Buyers are really looking for profitable and sustainable businesses
Yeah.
because if they acquire a business that's losing cash, the first thing they're going to do is restructure the business so it's at least default alive, which
Yeah.
generally just means it's break even or it's making money. So those are the businesses that definitely see the most interest is, profitable businesses.
Yeah, that's super interesting. And on a kind of personal note, are there any personality traits that people have that have done really successful deals on acquire.com, whether it's the buyer or the seller?
Yeah, I would say just people with manners goes
Yeah.
along. I know that's probably a simplistic answer, but like on the buyer side, I see a lot of buyers kind of jump right into just give me all these metrics and questions. And as a seller, it's like, hey, in my view, I've never really seen an acquisition happen smoothly without some sort of goodwill. So I always recommend to founders on that first call, just go over your business slightly, but really get to know the buyer because you're going to be working with them. If you sell the business with a transition period of could be 3 months, could be 6 months, could be a year. So just
Yeah.
being able to get along is kind of the first bar to clear. Obviously, there's other things that you want to do, like verify funds from the buyer.
Yeah.
Is there a fit in terms of knowledge? Will they know how to run your business once you're no longer involved? But general etiquette from buyers, and then on the seller side, and this also applies to buyers as well, it's just responsiveness. So when a buyer reaches out and has questions, you've had a great first call, they send you a list of pre-due diligence questions. The faster that you can respond to that, it just shows buyers that you're serious, you're
Yeah.
really looking to sell your business. And that kind of foreshadows what it's going to be like when you actually close acquisition, you actually are transitioning assets, or even when you sign the LOI, what is due diligence going to look like? Are you going to make it a long drawn out process? Are you going to be responsive, or do you have all your materials together? So I would say just, responsiveness is key on both sides, and then also building goodwill between the two parties.
Yeah, that's awesome. I saw you put a post out the other day with one of your founder that sold through the platform but retained, I think it was 10% of their business to kind of stay on and help with the integration and things like that. So I'm guessing the etiquette piece is a key part of the deal. And I know you mentioned SaaS and e-commerce are very popular, but are there any other main sectors that seem to be quite attractive to buyers at the moment?
Yeah, I'll tell you my personal favorite. So we service, so you can list any sort of software company on acquire.com. You can list crypto companies, mobile apps, you can list D2C, Shopify apps, really anything that's software related and generating revenue. We do list pre-revenue, but we're really, really, really picky about those. But in terms of a category that I am really bullish on is newsletters and audiences.
Okay.
I've been seeing some really interesting, let's call them like anonymous pseudo accounts with huge followings, big newsletters, making millions of dollars in profit. And it's just two people creating this content with a large following on social media. And I think those are great assets for other companies to pick up because it's so hard to earn customer attention today.
Yeah.
And you can buy customer attention through ads and stuff like that. But if you're able to pick up a property, like some examples would be Stripe acquired Indie Hackers, and HubSpot acquired The Hustle, and Zapier acquired MakerPad. There's a trend of strategics acquiring these audiences. And
Yeah.
so we've been seeing a number of newsletters. And obviously, uh, let me finish that thought. I'll move on to the next. We've been seeing a lot of strategics acquiring audiences for that reason, because if it's in line with their ICP, they can sell more of their product. And then the second category that's just absolutely blowing up is AI companies. We've been seeing a massive, massive amount of those being listed every day.
Yeah, okay. So super interesting on the newsletters. I haven't heard that too much, to be honest. That's really interesting. With the AI companies, obviously, I know ChatGPT has really made it kind of mainstream. What would you say is the average size of those AI businesses? Have they achieved scale and at multi-million revenue, or do they tend to be smaller than a B2B software or e-commerce platform?
Yeah, great question. They tend to be smaller. We've seen some bigger ones. We've
Okay.
seen some ones where it's like, whoa, you're growing fast. There's one listed that's already at like 10 million plus in revenue, and they've only been out for 8 months or something like that. They went to market 8 months ago.
Yeah.
But they're generally smaller because Chat GPT hasn't been around for more than a year. I mean, they've been around, but
Yeah.
people haven't been able to access it. So generally, most are on the smaller end, but there are some breakout ones that are growing at paces where even I look at that and I'm like, maybe see how this goes for another year. I think you got a lot of room in front of you.
Yeah,
So
yeah, that's awesome. And obviously you're a super successful entrepreneur, a couple exits under your belt, and now building this amazing business. Do you have any advice, any tips for founders at the beginning of their journey, maybe, or a second time founder on either scaling or getting to an exit?
yeah, I would say my favorite advice to give entrepreneurs is write down all the shit you don't like to do. That's so important. I know so many friends that create these jobs that they hate, and there's something that you can do where, am I getting like is this too detailed of an answer?
No, awesome. Yeah, brilliant.
So what you can do is when you build a business, I'm a big believer that it's so hard to compete against someone who loves what they're doing and it's fun to them, but it's work for you. So you want to find a business opportunity that truly is fun and kind of feels like a video game.
Yeah,
Like, so write down the stuff you don't like to do, and you'll be so much more successful. And a good way to do that, and maybe you're running a business now and you'd like to kind of shift over to that, you can still do it. And the best way to do it is a calendar audit. Print out your calendar for the next 2, 3 weeks, circle all the stuff in red that took away energy.
yeah,
That could be meetings, it could be sales calls, it could be, I don't know, something random. That's in red. And then circle all the stuff that gave you energy in blue. And then the red stuff is kind of your zone of competence, stuff you just have to do to keep the business moving. Maybe you're the best salesperson on the company. Maybe you're in charge of marketing. Delegate all that stuff to other people and then just focus on your zone of genius, the blue stuff, the stuff that gives you energy. Because when you focus on that stuff, you're gonna not burn out as easily. You're gonna have much more fun at work. And then again, I'm a firm believer that when you really love a certain craft or, part of building a business and that's what you focus the most on, you're going to be really good at it. So that's one. And then two is just patience. I think a lot of people think that building a business is really easy. And if I just, you know, if I have this idea and I build the product, customers are just going to find me and it's going to be great. So being patient, learning sales and marketing, um, other things for maybe people that are looking to start a business but have a job. Advice I always give is I'm a big fan of side projects, like build a side project, work on it. When you get to a point where it's actually generating revenue, then jump all in. Don't go all in all at once. And then, yeah, just be consistent. Great businesses take a decade to build, and it's completely true. So a lot of times, you know, when you're building a business, it really is a mental battle of just staying positive and optimistic. So I also recommend, surrounding yourself with optimistic and positive people and building a culture that you would want to be a part of and other people want to be a part of too. So to just summarize that mini rant, number one, figure out what you like to do because you're going to do your best work when you're having fun. Two, be patient, have a plan in terms of, are you going all in? Can you afford to go all in? And then work around that. And then three, focus everything on culture. Culture is what gets you through the hard times and the good times. And again, leads back to my first point of you enjoying the business.
Yeah, that's incredible. I think that first exercise of printing out your diary and circling things, I think I might definitely have to give that a go. So yeah, thank you for the great advice. Really interesting conversation. So thank you very much for joining me, Andrew. Maybe be great to do it again in 12 or 24 months, see where you guys have got up to. And yeah, we're wishing you the best of luck.
Yeah, thanks so much for having me on.
Thanks, Andrew.
Cheers.